In today's video, I'm going to show you two important strategies that you can use to trade divergence. And these two strategies are divergence of divergence at support and resistance for market reversal. This is specifically for lower time frames, and hidden divergence for market continuation. So let's dive right in. For those of you that are new to this channel, please help subscribe to this channel, hit that like button, and don't forget to turn on the bell notification for more updates like this every single day. Also check the channel for other educational content. Leave a like and don't forget to share this video. If you are very new to divergence, divergence means opposite direction when you draw trend line on the chart, that is a price action, and on the MACD indicator. There are other indicators that you can use to trade divergence, for example the stochastic RSI and the RSI indicator. These two indicators and the MACD indicator can serve as a better tool for divergence trading, but I always use the MACD indicator. So let's say, for example, if you are new to divergence, divergence means that if you connect 2 points on the charts and connect the same exact point on the MACD histogram right here, and the line is going opposite direction, then that means there is a divergence that occur at that very area. Let's say, for example, in this very case, you see from here we connect this line up to this very point, and on the indicator, that is the MACD histogram, from here to this very area, you see this line is sloping downward while this other one is sloping upward. There is a divergence. So in this case, we say this is a bearish divergence. Reason why: market move up, and then after this movement to the upside, we are expecting the market to come back down. That is why it is a bearish divergence. So this is a bearish divergence, and in this formation, from here to this very point, and on this very indicator histogram right here, this is a bullish divergence. Why? The market was moving to the downside, and at this point, market began to move bullish to the upside. So this is a bullish divergence. Now, there are other very important divergence trading strategies that I shared in my previous video. If you've not watched that video, check the channel for that very video. And today, like I said, we'll be looking at divergence of divergence at support and resistance for market reversal, and hidden divergence for market continuation. And if you look at the matic chart, divergence of divergence, that means, let's say, for example, at this very area of resistance, if you find another divergence within this very price zone on this very same chart, I'm using the 4-hour chart, then that means markets have a capacity of moving to the downside. Let's say, for example, in this case, on the matic USDT 4-hour chart, from this price zone of 2.3 to this very price zone of 2.7, market come back down after we spot divergence. See, divergence right here on the indicator and divergence right here on price action on the chart. Market begin to come back to the downside. What it means is, if we find divergence here again in the future, there is a high probability that market is going to go back down, and this is a reversal confirmation for that very chart. And if you look at this area, from this very point of 2.6 to this very area of 2.9, the market at this very price zone, which is almost the same with this very price zone, you see the market begin to crash back down again. So if you already have this in mind, if you know this strategy, that means when you begin to find this divergence again right here, which is within the same price zone with this other divergence, you see the market begin to crash back down after we spot divergence on the chart and also divergence on the indicator right at this very area. So if I make it very clear, you see divergence right here, and then divergence on the indicator, market begin to crash back to the downside. The same thing we see in the past, divergence right here, and then divergence on the indicator, market begin to crash back to the downside. This is a very, very important strategy that you can apply right now on your chart for massive gain in the market. Look at the market from here after the divergence formation, go back down up to this very point, and then from here market go back down up to this very area on the chart. So once you can spot it out on your chart, the market is going to go down because of this divergence of divergence, and this is at resistance level. So we can call this a bearish divergence on the chart because market moved to the downside. And then the next one that we also find on this very time frame is this very area as well. You see, market moved down, sloped down a little bit to the downside, and on the indicator right here, we see the market is sloping a little bit upward. So this is a bullish divergence. If you look at it very well, from this area of support, market is within the same price zone. So from this area of 0.8 to this very point of 0.7, and then we see this divergence here at this point of 0.7 to this very point of 0.74. Divergence of divergence at support level. This is a bullish divergence. After then, the market begin to move to the upside. From here as well, the market begin to move parabolically to the upside. Look at from this point to this very area. This is a massive move, and this is a reversal pattern because market begin to create higher highs and higher lows after this divergence. If you can spot out this divergence on your chart when it is forming, then you can be in the right direction on the market and ride massive trend. So this is divergence of divergence, which is for reversal pattern. This is a very important trading strategy that you can use to kill the market. Let's say, for example, in this very case, to spot out this divergence of divergence on the 4-hour chart on Matic, then after this formation, market begin to move to the upside. So in this very case, suppose to enter the market at this very point, because this is where we see a bullish presence, significant candle right at this very area after the divergence. So if you take this position, this is a long position right here, then stop loss slightly below this very area. You see the market move parabolically upward, see up to this very point, and market still continue upward to this very area. So this is a very powerful divergence trading strategy. Divergence of divergence at support, and then market begin to move to the upside. So the next strategy here is hidden divergence for market continuation. How you can spot hidden divergence for market continuation. The first thing you have to do in this case is you have to look at the higher time frame. So from the higher time frame back to the lower time frame to spot a hidden divergence. And what you have to do first of all is to come to the higher time frame. You spot an area where you see divergence on the lower time frame. For example, in this case, we have a divergence here that occur at the same dates, okay, on the lower time frame. But on the higher time frame, we don't see divergence. So the first thing you have to do in this case is there any divergence as at when this market was forming within this zone on the higher time frame? If you look at it, there is no divergence on the upper part of the MACD, no divergence. This means that the market is going to further move to the downside. And then the second thing you have to do is to spot out the divergence on the lower time frame. If you look at this, this is 23rd of May 2022 to this very area of 31st of May 2022. And then if you come back to the 1-day chart from this very point of 23rd of May 2022 at this area to this very point of 31st of May 2022, we have a divergence on the lower time frame. This divergence is a continuation divergence. It is an indication that the market is not going to move to the upside. Rather, the market is going to continue downward. So all you need to do is to spot out the divergence on the lower time frame, and then market is going to continue downward. Remember, on the 1-day chart, market was coming back to the downside already, and market continue downward. And that is why we need to spot out a bearish divergence on the lower time frame to ascertain the fact that the market is going to continue to the downside. So if you look at this area to this point, divergence on the chart and then on the indicator, and market continue back to the downside. This is a bearish continuation divergence that appear on the lower time frame. Another example of a continuation divergence, you see this area, market move from here to the upside, then retrace. So during the time of this retracement, that is, market move from this area to this area, then retrace before continuation. Before that continuation, you see from this area, this very date of 28 March 2023, market begin to move to the upside. If you spot this out on the lower time frame, you discover that there is a divergence right at this very point, and then market begin to move to the upside. That is what we see right here on the 4-hour chart on ETH USDT. You see from here, from this point of 21st of March to this very point of 28th of March, divergence on the price action of the chart, and then from this area to this very point, there is also a divergence on the indicator. That is an indication that market is going to continue to the upside after the market has moved from this area to this very point, retracement before continuation to the upside again. Remember, we did not see any form of divergence on this very chart, that is on the 1-day chart. Reason why, if you connect from here to this very point, then you connect from the same point from here to this very area. You see, this is almost at the same point, so this is not a divergence. Remember, the first rule is you have to ascertain that there is no divergence on the 1-day chart. So since there was no divergence and the market move up, then retracement, we have to look for divergence to confirm that these retracements have ended on the higher time frame and that the market is going to continue upward. And that is the exact same thing we see here on the 4-hour chart. So market diverge from here to this very point on the chart, and then from this same point on the indicator to this very area, and the market begin to move to the upside. At this very point where you begin to see bullish presence is where you have to take your trade for markets to begin to move to the upside so that you ride with the trend. Another thing is, if you have spot out this and then market have not broken out on this, let's say for example you come when this market has already formed a little bit to the upside, the best thing you have to do is to wait for this very market to break out of this very important level of resistance for markets to continue to the upside. Remember, the continuation is specifically for the higher time frame, and market is going to definitely continue for some time before a good retracement is going to come into the market. This is how you spot divergence for continuation, and I call this hidden divergence for market continuation, and divergence of divergence at support and resistance level for market reversal on the lower time frame. This is a very, very powerful trading strategy that you can apply right now on your chart to better your market prediction. If you are new to this channel, please help subscribe to the channel, hit that like button, and don't forget to turn on the notification bell for more updates like this every single day. Also check the channel for other educational content. Leave a like and don't forget to share this video. If you want to learn how to do simple technical analysis for profitable trading like this, please check the contacts in the description of this video and reach out to me right now. Thank you for watching to this video, and I will see you in the next video.